Hello, welcome to this hedge fund trading. This is the overall market chart which describes the entry and the trend at the same time. This is the complete tool set you can broadcast and start your hedge fund. Rules are pretty simple. This red thick line is the indicator for going long or short. You see these two yellow lines. The top yellow line and the bottom yellow line. When the oscillator indicator is coming down and crosses the yellow line below from above, we are going to take short based on the conditions that the price has to be below these three lines on the top. The line you see here, this is the trend line, which is where we are going to decide the direction of the trend. Once we are into the trend, we will stay in the trend. The white and the sign lines are the pullback add-on lines. We add on to the existing trend. So let's go through a quick example here. So this one crossed below here. This is not designed to pick the ultimate high and ultimate low. This is designed based on Gann's way of when the trend is confirmed, you get into the trend once it is confirmed. So the first step is, where is the price? Price is below the three lines. It is. It crossed below. Yes, this is the trigger. You will take your first initial position into this location. It went against you, which is fine. This is what is going to be termed as a pullback entry. The pullbacks will be decided based on the following rules. On the bottom, you see there is a schematic oscillations of the value. This is based on the sigmoid function from artificial intelligence filtration process. When the cross happens and then we see this oscillator is between the white top and the red top, it is sitting at the white line. This oscillator is on the top end. You can just draw the drop lines. We have now a second entry. This is a trend confirmation going down, pullback. We enter at the pullback our second position. And we're going to stay in the trend. You can add a third position here when it hits the top white line, fourth position here. And then you can see here all of them are now going to work out nicely. Now we will stay in the trend. Now the initial position, you can see here the price has to be below if you're going short between of all the lines, and we're looking for a pullback. But these are lagging lines. All right. So we shorted here, we added here, we added here, and we are riding the trend. We added here if you need to add more. And we are going to ride the trend all the way. So now this huge move is around 700 points. This is SPX, 700 points. If you added like 2-3 ads, you got this huge. So you have $100,000 position, $200,000 position, $300,000 position. You're talking about a huge money for your hedge fund right there. And we're not going to change our strategy until this red thick line crosses from below the lower yellow line, which happens here. And the condition is price has to clear itself above the three lines, which it did. Exactly the same opposite of here. You will take the initial position, then you'll wait for pullbacks. Right here, pullback into the line, and you can see the oscillator is here, pullback. These are all pullback, and this is the second pullback right here. This is the third pullback which happened here. This one did not go all the way down, but you can see. So what happened here? Average price, first position, second position is somewhere here. Again, 600 points. You're capturing the entire market moves by doing this. Right now, the trend is not shorting ready yet unless it cross over. So we'll be staying long only. Let's take one. We can go back 20 years, 30 years. We can randomly pick some more trades here. How about this one? Let's go back all the way to 2001, 2002. Same thing. Line crossed over here. Price has clearly cleared up. You went long with one position. You can pull back on the second, third. Now the pullback has to be close to the white line. So this is the actual ad right here. First entry, add here. And you got 800 points. 800 points. Now we want to wait for this guy to cross over, which happened here. Price has clearly cleared itself below the three lines, and we are looking for shorts only and add-ons on the top. First position, second position, third position, because they're all close to white lines. And you take the ride back down 600 points, 700 points, 700 points. Okay, now the oscillator has crossed over on the top side very clearly. Now there are some things. Now you see here, you will ask me, hey, why didn't we go along here? Look at the price location. It is not above this. So this one was a fake out. It's tried to come down, right? The price has to be above the three lines. I will write down these simple 5 rules. Right here, price is above, clearly above the three lines. You enter here first position. You have the pullbacks to the white line, and you're not going anywhere until it clears down. The price is not cleared down, so this is a fake shot. We're not taking this shot on the top yellow line because it did not clear. Price was not below the three lines. It was up middle of the line. So this is not a fake, actually not a real shot. So we're gonna stay long only. We'll stay long. There's no shot all the way. We captured all the way from here to here. 1100 points entire. This is a yearly move, so you can use your stocks or how you want to trade with 3x and long calls and puts. So here, then you'll have a whipsaw months as well, or maybe whole year. This was a whole year has flat. That's fine too. This will happen. But you are taking major runs in the market. Short here, market was clearly down when this happened. And this was another pullback area. And then what happened? You did nothing. So you basically, you'll wash out for the whole time. Market went up, clearly on the top of the three lines, and you reverse your position. Your short position now will not be reversed. So this will be basically a washout, no, 1 year, which is fine. Then you go for a ride for another 1500 points. 1500 points right there. Add on here? No, because it's already not close to the white line, so no add-ons. And now you're 1500 points up. If you pulls back, you can add on a little bit if you leak to, but it's way too extended. So you add on early parts of the building trend. Now the short signal came. Price is not below this. We will ignore it. Long signal came. We are already long. We'll ignore that. Short signal came. It is below this. It is below this. So you'll have to take a short. The price is below the three lines, and then we'll take a shot, and then we pull back is here, and we go ride our trend for 400 points, and we don't know. Now this could have been a wash too, depending on how you're gonna be trading this. Next trading signal came here, so if you went short here, depending on you're taking some money or not, you can see this is gonna turn. It turned. So let's say you are really holding it for years and years, so this will be a small wash as well. This is fine, but again, what's going to happen next? You'll buy here, very clear, long signal, pullback signal, boom, another 600 points, 500 points, right? So this is a beautiful system for hedge funds. Next one, market short here. We already discussed that. Let's do it again. Short here. So I went through 20 years, And we covered exactly the entire market, and you can, add on. You never been the wrong side. Sell short or buy your puts or buy your, 3x stocks which are designed for short, or buy VXX. That is upon you. What do you want to do? I'm giving you the perfect system to do it this on. And in fact, during this phase, you can also look at stocks and whatnot. This is the entire phase, how the big money is going to move. Short here, pull back into the line here. We already discussed that in the third one and the fourth one, and there we go. We got another 1,000 point drop. And right now, market says go up. It has cleared up clearly, went up, pull back, and there we go. So we have got. So you're getting entire move on the pullbacks, and when there is a confirmation of the trend change. We are not interested in picking the exact highs and lows. Not with this strategy. This is the GANS Rule 23. Let us join the confirming trend. So this is how it is done effectively. Nothing like this on this planet. And then obviously you can do your own. You want to buy puts, you want to buy stocks, you want to do this. That's all tactical trading. This is a system you want to keep, you want to follow. This is where we went long here. This is why we went long here, right? And people are asking me, hey, when is the bottom? I said, bottom is already made. We are going long. We went long here. We took a short here. We went long here, and we added here. We added this one too. So I hope you understand. Now this screen can be projected. There's a projection cost. There's also monthly leasing cost for this system for hedge funds. And there we are. Screen one is ready to go. Thank you.